welcome to 80 Now. A very good morning. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where our experts will answer all your stock-related queries. Now, do share your stock-related queries on WhatsApp with us. Ping us on the number that's flashing on your screen and get an investment analysis on your holdings and tips for fresh buys in the market. But before we get started with all the stock-specific queries, Ankita, another day of decline coming for the market, a very volatile session today.
Absolutely, Kanishka. We see declines yet another day because the tariffs uncertainty still looms. Because of the global tensions rising, we do see the tariff tensions rising. We do see market declining yet another day. In fact, we're testing the 25,000. As of now, we have actually slipped below 25,200 levels also on the Nifty. In fact, we were testing those levels, but we are below that. In fact, we are at the day's lowest point on the Nifty. 193 points cut that is what is coming in. 25,161 is where Nifty is at. Nifty Bank also trading at the lowest point of the day right now, trading with cuts of 290 points as of now. 0.5% cut coming in on Nifty Bank as well. Broader markets also seeing sharp cuts. In fact, mid-cap is down 0.8% and small cap seeing the sharpest knock today in trade with the cuts of almost 1% in trade. All of the indices are trading at the day's lowest point as of now. As far as the sectors are concerned, the defensives are holding the fort with FMCG and pharma only sectors in the green. FMCG is trading with gains of 0.8%. Hindustan Unilever, Radico, Godrej, GCPL, Dabur, Marico, these are the counters that are doing well, trading with gains of more than 0.5%. And Nifty Pharma is also holding the fort with Glenmark Pharma. Of course, Glenmark Pharma, there's a news flow coming in. So Glenmark Pharma is trading with gains of solid gains of 10%. It's actually locked in the upper circuit. Now remember, there is a 700 million news flow coming in on Glenmark Pharma, and on the back of that, that is up and away almost 10%. Besides that, you will also have Mankind and Alchem Labs that is doing decently well, trading with gains of more than 0.5% in trade today. But on the losing side is the IT pack. Now, IT is trading with cuts of more than 1.5%. We did see TCS come out with its result. TCS is the biggest laggard today, 2.3% cuts coming in. Now, while we did see a beat coming in on the profit front, we did see the EBIT and the revenue come in below what we were expecting in, and then the brokerages have also cut the target price for TCS, and on the back of that, TCS is down and out almost 2.3% in trade, and the entire IT pack is therefore being buoyed down because of that, Kanishka.
All right, then that's how the market is looking right now. But let's just focus and now coming to you, Kunal, in your episode of Kunal's Paathshaala, in your section of Kunal's Paathshaala today, which are the stocks that you've picked out for us, and what are we learning from them?
Thank you so much, Kanishka, as well as Ankita. And as you culminate the Paathshaala sessions, today I've taken a very lighter topic. It's a topic which we call as Burj Khalifa patterns. It's a pattern which is not the usual textbook patterns, but it's a pattern which tells you that how stock prices eventually come into a phase where the stock prices form a euphoric top. And somewhere, I think as a trader or as a market watcher, you have to be very, very careful of. So we'll look at how those patterns shape up into individual stocks. I've taken 3 examples. The classic sign over here is, where for a couple of days or maybe on the weekly charts, depends on the time frame you're looking out for, the stock suddenly comes out of a zone of a massive consolidation and then goes into a phase of a couple of days of a major price uptick. Now, those price upticks are unsustainable price upticks, and that generally met with an immediate price reversal or a correction for stock prices. So that indicates that the stock prices form a euphoric top. We generally get excited when the stock prices come out of a massive consolidation and we see a couple of days of strong price uptick. But then if the stock prices don't see a follow through up move, and if the propensity to reverse is very much on the higher side, that's a stock which you have to be very careful of, because these stocks, they tend to drag as well as reverse the entire uptrend which these stocks generally show. We will take one more example. HEG has been the other stock. As you can see, after a zone of a correction consolidation, the stock showing couple of days of strong price uptick, moving up from 400 to 600 in a matter of couple of trading sessions, and then post that we see the stock reversing back towards 350 mark. So you have to be very careful of such kind of patterns. They generally occur in stocks which are typically low beta. There are instances, we look at the third stock, which is ACC, which is relatively very moderate beta stock, but even in these cases the stock goes into a zone where for a couple of days the stock prices go into a very strong rally, but then it's been met with a very sharp correction or a no follow through on the upside. So you have to be very careful of such kind of patterns. They generally form on euphoric top prices euphoric top in stock prices, and that's where I think a trader has to be very, very cautious about.
All right, definitely, Kunal. Your Paathshaala is something everybody watches out for. But Kunal, let me come to you for a market question. We've been watching out for these levels very carefully on the Nifty. We have broken below the 25,200. Where do we go from here on? And in fact, when do we see, what are the levels that you're watching out for really? Because when does this consolidation really end? Because there's a lot of uncertainty that's looming on tariffs. Is it really going to find some direction once there is some certainty that's out? And what are the levels that you're working with?
See, when we look at the market setup, Ankita, I think it's just the tariff nervousness which is causing this kind of a mild correction, I would say very gradual correction onto the indices, because you look at the rest of the globe, you've seen the Chinese market hitting new highs, a multi-year high. You've seen Hang Seng hitting a very similar kind of a zone. US markets have been doing phenomenally well. European markets, very of the asset classes, dollar index has come back to sub 100 levels. We are almost at 97 on the dollar indices. Brent crude has stopped spiking about that 70-75 dollars per barrel mark. So global asset classes, I think, are in a state of calm, and indicates that the uptrend for many of the equity asset classes is very much intact. It's just that the nervousness which is there around the tariff that's causing our markets to correct. Maybe another 100-150 points on the downside is where we can expect, but I think that should be throwing up a very good opportunity for contra traders who are looking out for fresh buys on the Nifty.
All right, so all that correction on the basis of that nervousness due to tariff-related uncertainty. But on that note, we'll take a very short break. Thank you so much, Kunal, for with your latest session of Paathshaala.
Stock-related questions answered by our experts. So you can start sending in your questions on the number that's flashing on your screen and get investment analysis on your holdings and tips for fresh buys in this market. Write to us as soon as possible. The number is right now flashing on top of the screen. Now we're joined by Ajit Mishra, the SVP Research, Religare Broking Limited, who's joining us as a fundamental guest, and on the technicals we're joined by Kunal Bothra. Hi, good morning to both of you. Thank you so much for joining us and taking the time out for answering all the questions. Let's get started with the first question then. This is Angad, who's writing in from Indore. Now Angad says that he's bought Hindustan Zinc at 441. Is it a hold for the long term? Let me come to you on this one, since this is a long-term question. Ajit, would you like to take this one? Hindustan Zinc for a longer period of time. He's bought it at 441. Do you see more upside to it?
Yeah, good morning, Ankita. So, Ankita, most of the metal names are witnessing a mixed trend as of now. Means if you talk about Hind Zinc, particularly after making a record highs, in the mid of 2024, it's been decisive corrective trend. So it's almost a year now that the stock has been witnessing correction. And since he's a long-term investor, he can continue to stay put because the stock has formed a very strong base around 375 to 400 area. And probably, in the next 1 month or two, this base formation might complete. So as of now, yes, he should continue to hold. In the first leg of the recovery, maybe 525, 530, something that the stock might witness as a first hurdle. And once we surpass that level, then probably 600 plus zone is something that the stock might attempt. So as of now, it's a hold with 375 on the closing basis as the stop loss.
All right, so it's a hold call coming for Hindustan Zinc. Now, Ajit, I'll stay with you. We have another long-term query coming in. Reena has written from Kerala. She holds 2,000 shares of Bank of Maharashtra, bought at a price of 68 rupees. She wants to know if it's a good bet for the long term or if she should exit, and if so, at what price?
Definitely, PSUs, we have seen all the major challenges. They are largely behind us now. And especially if we talk about Maharashtra Bank, it has recovered. It has, in fact, outperformed majority of its PSU peers. And still, the stock has been holding strongly above all the major averages on multiple time frames. So all the parameters are in the favor that this stock positive trend is likely to continue. There could be intermediate consolidation every now and then, and that is what we are seeing from almost 3-4 weeks now. But in the next leg, once we see stocks are passing 58 levels, then probably 70, maybe higher, is something the stock might attempt. So as of now, since the view is long-term, she can stay put with 50 as a closing basis as a stop.
All right, moving on then from Bank of Maharashtra to the Autopac. Kunal, this question is coming for you. So this is Dean Sequera, who's writing in from Goa. He says that he wants your view on Mahindra and Mahindra, if it's a good time to buy at current levels for the next 1 to 2 years. Kunal, M&M on the charts, how does it look like to you? And 1 to 2 years, is it a good bet from the auto pack, or is there any other suggestion?
Yeah, it's a good bet from the auto pack. I think M&M has managed to stand the the toughest of the market times, even in the last 3-6 months, where there was a phase of a major correction, and then and post that we saw the markets going to rally. The stock has done reasonably well. I think at current levels of 3,100, you can look to start buying. I would not say it's a perfect level to start buying or to buy the entire quantity for M&M, because there could be a scope that if in case the market goes into maybe one more leg of correction, then you might probably expect the stock to head into a retest of the previous supports, which is around the 2,900 mark. So you can start nibbling at current levels. Since we have a time frame of more than 1 to 2 years, I would expect M&M to do pretty well for itself over that kind of a time span. Buy on dips is where I would advise you can start at current levels.
All right, so buy on dip strategy coming for Mahindra and Mahindra. But Ajit, now coming to you, we have another query coming from Zenith, who's written from Ranchi. She wants to know if she can invest in Coal India for the medium to long term. And if you do advise that, what's the entry level at which she should enter?
Right. So coal also, if you see, it's almost over a year now that the stock has been experiencing correction. The last 4-5 months is a very tight range consolidation that the stock is experiencing while holding around its medium-term moving average. That is the 100 weeks of exponential moving average. So that's the good part, means we are not seeing any major damage to the price structure for almost 4-5 months. But at the same time, the upside is also capped. So since her view is medium term, she can start accumulating at current levels. She can add more in case if the stock slips around the 360 area. And for the entire position, 320 on the closing page should be her stop. For fresh momentum, the stock should surpass 400 levels decisively. Then we can see the resumption of the uptrend, which can help the stock to inch toward 440, 460 levels in next 6 to 9 months.
All right, let's move on to the next counter then. Next question that is coming in from Naman Deora, who's writing in from Kolkata. He says he's bought ITC 2 days back. He's bought it at a buying price of 419 rupees. He wants to know both fundamental and technical view for ITC for the time horizon for 3 to 6 months. 3 to 6 months is a very short period of time, Kunal. What do you see on the charts for this one?
Yeah, so I think looking at the current trend for the FMCG pack, I would believe eventually stocks like ITC, I think they should make a decent comeback for itself over the very short term. And as it is, the stock has been trading into a range. The short term charts, I think 410, 412 is a strong support for ITC. So you can keep that as a stop loss since your time frame is restricted towards 3 odd months. And on the upside, I would probably look at say 425 to 430 as a potential target range.
Okay, so that's the view coming in on ITC. But moving on, we have another query. Now this one is from Punita, has written to us from Coimbatore. Ajit, if you could suggest 2 pharma stocks and 2 mid-cap IT stocks that she could invest in for the long term.
So from the pharma basket, Divi's definitely is one candidate which has been steadily outperforming, irrespective of the overall pharma sector performance and the market performance. There's one name, Divi's. Another stock that has started forming a strong base, that's Cipla. So Cipla is also something that she can consider. From the mid-cap IT basket, Coforge definitely tops the list. The stock has been outperforming within the mid-cap IT basket. And then you can consider Persistent also, but not the current level, since we are seeing a crack across the IT spec post TCS numbers. So
all right, let's get the stock-related questions answered by our experts. The number is flashing on top of your screen. Please do keep sending in your questions. Please do not forget to write the buying price, the holding period, and your question. Let's resume with all the queries then. This one's coming from Soma Shekhar, who's writing in from Bengaluru. He's a short-term trader. He wants to know if Dr. Reddy's is a good buy at current levels. Kunal, Dr. Reddy's at current levels, is it a good time to enter?
Well, I think yes, it's a good time to enter the stock price. I think Dr. Reddy has been one of the few names which has been much more consistent on the long-term charts. The stock has retraced back towards its 200 DMA, as you can see, I think at 1250, 60 levels where the stock is trading right now. It's given a golden crossover as well on the daily charts. So I think on the back of this could be a good proposition for a medium to long-term hold.
Okay, so medium to long-term hold call for Dr. Reddy's. But moving on, Kunal, another query for you. Ellen Iyer has written to us from Trivandrum. He wants your view on iRadar. He has 267 shares holding at a price of 209 rupees. He wants to know if he can hold them for another 2-3 months. You know, we also have had the result yesterday, and the profit did slump 36%. But the net interest income, that was up by just as much. So what's your view here on this one?
Suggest an avoid on IRIDA at current levels because the stock is still showing signs of struggle over the last many months. In fact, there was this point where the stock had done exceptionally well. When the stock was moving post the, I think, the listing about 200 levels. But then post that, we've actually seen the stock struggling. And now, the stock is below its 200 DMA. It's currently also fallen below its 50-day moving average. There have been gap down, reactions on the candlesticks on the charts for IRIDA. All of that, indicates that the stock is still under a selling pressure, and you've not seen, strong buyers emerge into the stock price, which could lift off the trend, for the stock. I would suggest an avoid as of now. The breakout point for the stock could be above 175 mark. So I think whenever the stock breaks, closes above 175 mark and sustains about those levels, that's where you can expect a change of trend for the stock.
All right, moving on then from this to the next counter. This is N. Ra who's writing in. He says he is holding 100 shares of Praj Industries. Should he sell and buy Reliance or any other large cap name? Ajit, any other suggestion, or do you think he's not written the buying price for Praj, but is it a good bet to be holding? He's not even written the time horizon though.
So Ankita, I understand considering the underperformance the stock has been experiencing for almost 8-9 months. In fact, the last 2-3 months, it's almost negligible price move. So at one point of time, yes, it seems a better approach where you skip or you exit from the underperformers and switch to the sectors or themes which are trading in sync with the market trend. So if the view is, let's say, short term, definitely he can consider doing the same. And like we have mentioned few names during the show, so he can consider any of the names like M&M and all for replacing it with Paraj. In case the view is long term, I feel that one should stay put, considering that the stock has formed a strong base after this correction, and probably triggered from maybe earnings or any other news related updates due to the ethanol and on something that might trigger the needed recovery or rebound in the stock, which could help the stock to inch toward 550 area in the next up move. So as of now, if the view is long term, he can stay put. Otherwise, he can switch to M&M.
Okay, can stay put for the long term or switch to M&M. That's the view. But with that, that's all the time we have today on Buy Now, Sell Now. Thank you so much, Kunal and Ajit, for joining us and answering all our queries today. On that note, we'll wrap this edition of Buy Now, Sell Now. It's a goodbye from me and Ankita. We'll see you next week with all the queries being answered by our experts.